Bank of England will hike rates when inflation hits 10%. The Bank of England may hike interest rates again on Thursday, despite concerns about a dramatic downturn in the British economy, to combat double-digit inflation. After the US Federal Reserve raised borrowing prices by 75 basis points on Wednesday, markets are expecting the BOE's June policy statement at 1100 GMT. Financial markets expect a quarter-point bank rate hike to 1.25%. Investors expect a half-point raise from the BOE, which hasn't happened since 1995. Since December, when it boosted rates following the coronavirus epidemic, the BOE has raised borrowing prices 4 times. Britain faces high inflation, zero growth, or a recession more than other prosperous countries. Its economy is already slowing and will be the lowest among major, affluent nations next year, according to the IMF and OECD. Inflation touched a 40-year high of 9% in April and is expected to top 10% later this year, 5 times the BOE's 2% objective. These projections may prove too low following the recent collapse in the pound's value, which will increase the cost of imports, especially oil and gas. Part of Britain's inflation issue is its method for controlling domestic electricity costs, which implies price increases will continue longer than elsewhere. Britain's labour crisis is driving up salaries for some and possibly contribute to inflation. And there's Brexit. Britain and the EU are at odds again, which might increase trade obstacles and pricing. The BOE is expected to indicate again on Thursday that its sequence of rate rises has further to go. Last month, it warned investors were going too far by pricing bank rate at 2.5% by mid-2019. Since then, markets are pricing bank rate at over 3% by December. The rise is partially due to hopes of greater cost of living aid from the government after Finance Minister Rishi Sunak pledged extra support in May and Prime Minister Boris Johnson sought to boost his sagging popularity. Franklin Templeton's David Zarn believes short-term British bond rates might climb further.